Let's get into some details today around the SEC and some of their activities here recently, including taking on PayPal and going head-to-head with one of the biggest financial institutions out there. It's going to be a good one. My name is Paul Barron. Welcome back into Tech Path. Before we get started, I want to play a little clip for you from our sponsors, and that is Tangem. If you guys are looking at going into self-custody, this is the play to go. So a lot happening within their new app updates. Some of the things pretty simple, dark mode, of course, yes, but I like the features that we're getting into the concept of doing sorting of your assets. That's a cool feature. The other thing that plays into this hardware wallet is its ease of use. And the app itself, along with the 3 cards, which, by the way, if you go over to the Tangem website, we'll leave a link down below, get the 3-card pack. So it's going to give you guys the ability to do some cool things within not only securing your wallets, but keeping those backups, all those kind of things. That's the biggest thing around it. If you're keeping any of your tokens on exchanges, stop now and get them into a Tangem wallet. All you have to do is click our link down below and you'll get the 10% off on the PBN discount. So do that. All right, so I'm going to go over and hit up on a couple of things here. I want to start with the Squawk Box video, and this is about halfway through. I'm going to play this for you guys. This will get into the detail around what we're going to look at in terms of a recession. Listen in.
Do you think the Fed is trying to look ahead now and finally trying to anticipate rather than react?
Yes, I do. But I listened to Powell's press conference, and I think he's just as confused by all the different data points as everybody else. Maybe that's why he wants to pause, because he doesn't know what to do.
Will there be another hike?
I have no idea.
What would you do?
I'd wait. See what the data says. You've already raised rates so much. Another 25 basis points from here is not meaningful. It's more of a messaging. So wait till you.
But are you expecting in a year from now that he's going to be lowering rates?
No, I don't. I don't actually think we're going to, unless we have a very bad recession. I don't think we're going to see the Fed lower rates. I think Powell is still petrified of what happened to Volcker in the early 80s.
So those folks are saying buy bonds right now, right? By 10 years because rates are going to come down. You don't think that's the case?
I think that's way too early to make that kind of prediction. I wouldn't be doing that.
You think he's terrified of what happened to Volcker when he lowered rates?
When he lowered rates and inflation resurged,
yeah.
That would be the worst possible outcome that could happen to the country and for Powell's reputation. I think he lives in more fear of that than a recession.
All right, so a couple of things. We covered this on the FOMC meeting the other day, and that was pretty much my take, is that even though the pause did occur, I still think there will be another rate hit because of the data that's coming in and causing the confusion by Powell. They don't know how to read what they're coming in. If you think about this, the most massive rate hikes we've had in the last 2-3 decades, obviously a recession looming, if not already here, some of the worst kind of numbers coming out of different sets of markets, including an 8% mortgage rate. All of this plays into either a correction or possibly one last little gas to hold it. But I do agree with him, and that is the Steve Ellsman, which is that could Powell go in the direction of holding a pause, going much higher for, and I say much, meaning higher for longer, much longer, and not reversing rates. If that does happen in 2024, it does mean we are having a recession. Now, a couple other people out there that are looking at this is, of course, Arthur Hayes, Powell pivot. Slowing down is giving us, I think, a better sense of how much we need to do if we need to do more. But every measure of inflation is above the Fed's target of 2%. Guess it's time to pump up financial assets. I don't necessarily agree with Arthur right now on this particular point, in the sense that I think we're far enough out yet because of the data that continues to pile in. The GDP growth, I know that people are looking at the GDP possibly correcting and jobs numbers finally catching up. But I still think that we are in a position to where until there is real pain, and that will most likely come after Q4, if there is real pain, that's when the Fed will act in reference to that. Now, with that, you've got, of course, some pretty big things happening in Japan, now approving 110 billion in stimulus packages to fight the inflation situation. Of course, if we follow the track of what's happening in Japan with this hyperinflation potential risk, then yeah, you're going to see that. But the question is right now, is it the time? And I still think that Powell's got another 25 basis points in there. And to Steve's point is that it's going to be a messaging thing. that will help keep the markets in check. Because if we do get a resurge on inflation, to his point, he definitely does not want that to happen, because that could really set things into a motion that is almost, well, maybe could take multiple years to correct. So there's a lot happening right now. Now, moving over to PayPal. PayPal received a subpoena regarding its $156 million market cap stablecoin, which is PYUSD. We've covered this. If you don't know much about that stablecoin, go back to our video and watch PayPal's stablecoin launch. It's a big deal because this, I think, is good for PayPal in the sense of becoming the next generation financial tool. The interesting thing, and I'll show you guys some things about this in a little bit, the interesting question here is why the SEC went after PayPal. Now, there are some things around this that is kind of unique of whether or not the SEC thinks they have a position, or there's some other scenarios that are playing out this from a political point of view. I won't get into playing favorites, but we know Gensler. I think everybody kind of understands what's been happening further. So I'd love to kind of get your feedback on where this is going. From the article, it says significant development, obviously pioneering the move in August. This is when the PayPal introduced the stablecoin. And they're really kind of the first, I think the first giant that has been hit. Now, remember, this is a subpoena. It's not an action. So we haven't seen a Wells notice, things like that, all coming out. So PayPal issued some more information. The digital giant obviously is prohibited from allowing new customers to buy new crypto assets, expanding its current offering for crypto assets, and operating an automated process and exchange crypto assets for money without FCA's approval. So that's something there. October 31st, before PayPal's SEC subpoena, the UK Treasury published a proposal to integrate crypto activities into the financial services regulation. Remember what's happening in MiCA within the EU, and now the UK also moving active. PayPal's PYUSD, an ERC20 token issued on ETH, of course. And then during this, the SEC subpoena indicates the road to achieving this objective is fraught with regulatory obligations. This, of course, has been Gensler's argument all along, is that everything's a security, including your Pokemon cards. So I think it's just a situation where they're firing some stuff across the bow here. We'll see how it goes. I want to go over to a tweet real quick. This is kind of just John Deaton chiming in on this. Under Gary Gensler, will not stop at trying to take down anyone who adopts blockchain technology to give their business a competitive advantage in the financial space. And now he's going after PayPal. This is a good statement by John, because he's right in the sense that anybody that is really starting to move in this direction. The interesting thing, though, is we are on, I think, the doorstep of some major financial institutions moving in this direction. Now, why has Fidelity not been approached yet? Obviously, one of the biggest, I think, out there in terms of digital assets from the mainstream, financial asset managers. And then you've got the potential of what will happen when we get a Bitcoin ETF and possibly going into other ETFs, things like Ethereum and even their other assets going in that. So it's going to be a very interesting year, I think, coming up. Just as a note here, U.S. SEC messed up in handling the contentious crypto accounting bulletin. This is a deal that happened earlier this week. The SEC was out of bounds when it issued the controversial staff accounting bulletin. A little bit about that, the guidance, which is the industry threatens to crypto investors the ability to find safe harbors in their assets, should have been treated as a formal rule. And of course, this is the GO included a report on Tuesday. And the accounting bulletin should have gone through a different process, which is really going through Congress. That's what it boils down to. And the SEC, in their beautiful architecture of overreach, they do it again. And of course, they get into a little bit of a match with McHenry and Lummis. This was, of course, Chair McHenry responding to this. He simply says the rule would impose massive new requirements on financial institutions and other firms to place digital assets on their balance sheets as a liability with a corresponding asset. So this gets back to this whole accounting rule. And then ultimately, this would deter institutions and firms from offering custodial services, which is a huge one, denying Americans access to safe and secure custody of their assets. This is a problem because, this could even go into the big ones, such as a Fidelity, who already does this with Ethereum. And right now, the bulletin has massive implications, and the SEC should have received feedback from the federal banking regulators and public before implementing a legally binding directive. This came from Lummis. So we're aware, we don't really know which way Lummis is leaning yet. just because she's kind of been back and forth. Maybe she got baited into this little thing with the Hamas scenario, but the fact that she is defending is showing something. This sets an incredibly dangerous precedent. I plan to use Congressional Review Act to block this rule in the coming weeks. So there's some big actions right now in D.C. about this. Another thing here, this came from Deaton. It's a clear statement of a federal agency that the SEC broke the law. Ever since the Ripple lawsuit, SEC has consistently not followed the law. They don't care. Not only are they hypocrites, but they also lack a faithful allegiance to the law. And the SEC does more to hurt the investors than it does to protect investors. I would agree with that. Now, granted, the SEC is in full tilt against crypto right now. If you look at what they've done here with Safemoon, and granted, this is kind of low-hanging fruit. If you're going to go after the scammers, of course, get the scammers. And this is one that did happen. Safemoon crypto and token executives now were arrested and charged with fraud. So this is at least what they're supposed to be doing. The only problem is they're going after real companies who are running real businesses in causing a lot of mismanagement, I think, of the asset. Sometimes I wonder if the SEC is doing this more out of an idea of just, detract and, defend, create noise over here, nothing to see here kind of thing. I don't know. It's a very interesting situation right now. But the charges in the company's orchestration of a massive fraudulent scheme through unregistered sale of crypto assets and security Safemoon. Additionally, the SEC charges the firm that misappropriated investor funds for personal use. So those are typical things that are happening, not just in crypto, but in any kind of company, including VCs, private equity, independent angel rounds, all those kind of things. All this happens in any federal regulated fundraising. These kind of things happen, and that's what the SEC is for. It is supposed to do those kind of things. On to some other news. Here is Microstrategy stocks, their advantage over the planned spot Bitcoin ETF. This is something that Saylor is talking about. I don't know. I would love to get your input on this. I'll reserve for some of you guys. You can drop some comments down here before I kind of go in this direction. But basically, Saylor is saying that the Microstrategy stock offers a way to get Bitcoin exposure with the benefits such funds won't offer, such as an ETF. Further in the article, here is some explanation here. A spot ETF would charge investors a material amount, which will dilute returns meaningfully over the time. Why would someone, a prudent investor, want to give up such a large portion? I don't know that that's a large portion. We've shown some of the fees that have been proposed. They're not super expensive compared to that. From a standpoint of intrinsic value, any downside move in Bitcoin will be partially offset by the stability of the underlying asset. So spot ETFs offer no such protection. But you also have to think about the fact that MicroStrategy itself, the stock, could also take a deviation and market correction. So there's kind of I don't know, I'd love to get your feedback on which way you would play it. I'm looking at this from an ETF standpoint. I think that's going to be the route that people will take. Could people say, no, I'm going to play this direction, with MicroStrategy? But hey, listen, it's an interesting argument. Always love to kind of get feedback across our channel. So drop some comments down below. Here was James Lavish talking about this. Institutional investors who were once worried about career risk for owning Bitcoin now are beginning to worry about career risk for not owning it and wondering when Gensler is going to finally approve the spot ETFs for them. I think this is an interesting thing. Just as a reminder, with this subpoena against PayPal, this is PayPal's current market cap right there at $60 billion. This would be one of the largest companies approached by the SEC for these kind of activities. Let's compare them. There's Goldman, $100 billion, and here's Coinbase at $20 billion. Coinbase, plenty of time to go head to head. PayPal is 3 times that size at a heavily deflated value. Just if you go back to the PayPal numbers and you go to let's just go to the max. Look at the deflated value of PayPal. These are the reasons that PayPal is going into alternative product and financial services products out there. So this is something, this company at one time was worth almost 4 times that. So this is a big one for sure that the SEC is about to take. All right, guys, if you are listening in over the podcast, get over here on the YouTube channel. It's the best place to catch all this content, unless, of course, you are going to join the Diamond Circle. That's where you're going to get additional content. We do another podcast over there. I also do some shows over there that we don't put here on the YouTube channel. So check it out. Click into the diamond circle down below. And of course, if you want to catch me out there on X, it's @PaulBaron. We'll catch you next time right here on TechPath.